Welcome back, everybody. Ready for another deep dive?
Absolutely. Always ready to jump into the numbers.
Well, today we're taking a look at something that might sound a little dry at first, Goldman Sachs's earnings. For the last quarter of 2024 and the full year.
Yeah, the old earnings reports.
But trust me, this is anything BUT boring. We're talking record financing revenues. Goldman's helping companies get the cash they need to grow at a pace we haven't seen before.
That's right. And they snagged that top spot for global M&A, too.
Exactly. They're basically orchestrating the biggest business deals across the world. And to help us make sense of all this, well, we've got a true expert in all things financial analysis.
Happy to be here.
All right, so Goldman Sachs, they pulled in some seriously impressive figures this year. Over $53 billion in revenue for the whole year.
Wow.
Yeah, and almost $14 billion just in that last quarter. And that translates to earnings of $14 billion for the year. A little over $4 billion for Q4.
Those are some big numbers, for sure. And I think, it's important to remember these aren't just random figures. This is the second highest performance in the firm's history. So it's really saying something.
They're definitely doing something right.
Yeah, and it really aligns with what CEO David Solomon has been emphasizing about meeting those strategic targets they've set. He's actually highlighted the fact that they've achieved almost 50% revenue growth since back in 2019. And, he stresses that the firm is just in a much stronger position now than it was then.
Okay, so they're making a ton of money, but what's the plan? Where are they going from here?
Well, Solomon laid out three big objectives for 2025 and beyond.
Okay.
First, they want to really leverage all that expertise they've got across different areas to, better serve their clients.
Got it.
Kind of like a one-stop shop for all your financial needs.
I like that.
And second, they're aiming to build businesses that are not only successful, but really durable, built to last.
Reliable. Consistent.
Yeah, exactly. And lastly, they're really focused on investing in ways that let them grow and just expand their reach even further.
So it seems like this whole idea of durability is key for them.
It is. It is.
Yeah.
It suggests that Goldman Sachs is looking beyond those short-term wins. They're thinking long-term, building a foundation for, sustained success.
Playing the long game.
Playing the long game, yeah. And I think that's a smart move in a world that's as, constantly changing as ours is.
For sure. All right, so that's the big picture, but let's zoom in a bit. First up, we've got Global Banking and Markets. GBM.
Right.
This division, this was a star performer, brought in almost $35 billion in revenue for the year. That's a 16% jump compared to last year.
Yeah, huge.
And they hit record revenues in equities, too.
Wow.
Meaning they're killing it in the stock market.
This is a clear sign that Goldman Sachs is really good at adapting, thriving in a market that's as dynamic as this one. And within GBM, we're seeing record profits from helping companies raise money, both through bonds and stocks. And on top of that, their investment banking fees, that's the money they make from advising on deals, it went up by 24% year over year.
Oh, wow, that's huge.
Yeah, it is.
And let's not forget, they're #1 worldwide for mergers and acquisitions.
Forget that.
That's not just bragging rights. That shows they're the go-to firm if you're looking to make, one of those major deals.
Right, right. And all this activity, it's going to be saying something about the bigger picture too, right? All these mergers, companies getting financing, that could be a sign of broader economic confidence. Like businesses are feeling good enough to make big moves, and Goldman Sachs is right there with them.
So they're not just riding the wave, they're helping create it.
Exactly.
Okay, now let's shift gears a bit to asset and wealth management. AWM. This is all about managing money for individuals and institutions, right? They pulled in a very respectable $16 billion in revenue for the year.
Nice.
Another 16% increase from last year.
Wow, 16% again.
Yeah. And they had those record fees for managing money and for providing private banking and lending services. And they're sitting on, get this, $3.14 trillion in assets that they're supervising, up 12% from last year.
So AWM, it's like this giant machine, just attracting more and more wealth to manage. And that steady growth, it really demonstrates how successful they've been in moving towards that more reliable recurring income stream. Instead of being so reliant on the ups and downs of the market, they're building a solid base from managing other people's money.
Okay, so we've talked about the powerhouses, GBM and AWM, but what about platform solutions? What about Goldman's move into consumer banking? This is where things get a little more interesting, don't they?
Yeah, a little more complicated for sure.
Yeah. So this segment brought in 2.43 billion in revenue. That's a 2% increase from last year.
Yeah, a bit more modest compared to, those other divisions.
Right, exactly.
And I think that this is where we really see some of those strategic shifts starting to play out.
All right, so break it down for us.
Well, the consumer platforms, that part of their business actually grew by 4%, driven by, things like credit cards and deposit balances.
Okay.
But they're planning to change how they work with General Motors on their credit card program.
Ah,
So
interesting.
that might affect future growth a bit.
I see.
And then their transaction banking and some of those other revenues, they actually shrank by 8%.
Mhm.
And that's because they sold off a big chunk of their loans to businesses.
So it sounds like they're being really careful about how much they're actually investing in the consumer side of things.
Yeah, I think that's right. Remember, they had some challenges there before,
Mm.
and now they're kind of stepping back, reassessing their strategy.
It almost reminds me of, it's kind of fascinating to see how Goldman Sachs has been, well, I guess you could say changing their game plan over the past few years. Like they've been pulling back from some areas while really doubling down in others.
It's like um, they're pruning a tree to help it grow stronger. They've learned from their experiences, like that attempt to break into consumer lending with Marcus, and now they're focusing more on what they do best.
And that's what those strategic goals really tell us, right? They want to build these world-class businesses, businesses that are unique. And I feel like we keep coming back to this word durable.
Oh, yeah, durable.
Like they're not just going for the quick win. They're in it for that steady, long-term success.
And that's where that really impressive performance of global banking and markets and asset and wealth management, it all comes into play. These are the areas where Goldman Sachs, I mean, they've got deep roots there, a proven track record. They're playing to their strengths.
Okay, so let's dig a little deeper into GBM. We've talked about those record financing revenues, how they're at the top of the M&A game, but what does all that tell us about their game plan for this division?
It seems like they're really riding the wave of this booming capital market. Companies are eager to raise money, for expansion, and Goldman Sachs is right there to help them do it. Especially with some of those more complex types of financing, like leveraged finance and those equity offerings. They're not just giving advice; they're actively providing the funds that these companies need to actually grow.
So they're like, I don't know, the financial architects behind some of the biggest deals happening right now.
Exactly, exactly. And this is where their long-standing relationships, I mean, years and years of building those relationships with clients, it really pays off. That and their global reach, those are huge assets. They just have the know-how and the resources to put together these really intricate financing deals, which gives them, well, it gives them a real edge over the competition.
And their dominance in the stock market too, those record-breaking equities revenues, we can't ignore those.
Absolutely. I mean, it's clear from those results that their expertise in trading, prime brokerage, financing portfolios, it's all, it's really top-notch. That equities franchise, it's a cornerstone of their whole GBM business.
All right, now let's switch gears over to asset and wealth management. We know they're pulling in those record fees for managing money, but what's fueling that growth, do you think?
It all comes down to attracting and managing wealth.
Yeah.
And Goldman Sachs is doing a phenomenal job of it. I mean, they're pulling in those high net worth individuals, big institutions, even other wealth management firms with this wide range of investment options that they offer.
It's pretty impressive that they're now managing $3.14 trillion in assets. It really speaks to the trust that their clients have in them.
Yeah, and you have to remember, this segment, it's all about generating those reliable, recurring revenues. Those management fees, they're a consistent source of income, which makes AWM kind of a stable, predictable part of their business.
So it seems like they're striking a balance, making the most of this dynamic market while also building that really strong base of that more steady income.
That's a great way to put it. They're aligning their actions with those stated goals, those goals of running these durable, world-class businesses.
Okay, now let's turn our attention to platform solutions. This segment, it's been going through some pretty big changes lately.
You're right. You're right. I mean, it's clear that they're trying to streamline their operations, zeroing in on those areas with the highest potential for profit. Those changes to their GM credit card program that are being planned and selling off that seller financing loan portfolio, I think, are perfect examples of that, that shift in focus.
And it's interesting that they're pulling back a bit from some of those consumer banking ventures. So does
Yeah.
that mean they're like
Yeah.
giving up on the consumer market entirely? Not necessarily. I think they're just being more strategic, more selective, maybe. They're still holding on to a sizable credit card business, and we're seeing growth in those consumer deposits.
So it's more of a recalibration than a full retreat.
Yeah, exactly. They're adjusting to that changing landscape and really trying to find, the best path forward for this part of their business.
Before we move on to the final part of our deep dive, I want to circle back to something that really struck me. Goldman Sachs' dedication to its employees. They've increased their headcount by 3%, and they consistently rank as a top employer.
That's a crucial part of their success. In a field as demanding and competitive as finance, attracting and keeping that top talent, it's essential.
And it seems like they're doing just that. They're really focused on investing in their people, fostering that strong company culture, and offering those opportunities for growth. And it's clearly paying off. Yeah, this is a key takeaway from these earnings results. It's not just about the numbers, it's about the people behind them. Goldman Sachs understands the importance of what we call human capital, and their continued investment in their employees. It's a strong signal, I think, of their commitment to future success.
Okay, so that wraps up part 2 of our deep dive into Goldman Sachs's 2024 earnings. Make sure to stick with us for part 3, where we'll tie everything together and leave you with a thought-provoking question to ponder. Okay, so we've gone pretty deep into Goldman Sachs's performance in 2024. What are some of those key takeaways you think our listeners should, walk away with?
I think it's safe to say Goldman Sachs really knocked it out of the park. They exceeded expectations, I think, for both the fourth quarter and the whole year.
Yeah, they did. And it seems like their success was really driven by the strong performance in those two, powerhouse divisions we talked about, global banking and markets and asset and wealth management.
Yeah, and within GBM, it's really interesting to see that that shift towards financing as a major source of revenue. They're becoming less dependent on that more volatile trading income.
And in AWM, their strategy of attracting and managing wealth for clients, it seems like that's a real winner, giving them that nice steady stream of income.
But beyond just looking at each division in isolation, I think it's clear that Goldman Sachs is in a really solid financial position. Overall, they've got strong capital reserves and plenty of liquidity.
And remember, they're not just investing in their business, they're investing in their people too. And that commitment to attracting and retaining top talent, it's absolutely crucial in a competitive industry like finance.
Absolutely, I think it's a major differentiator for them, and it'll likely play a big role in their continued success. It's a bit like a sports team. You need a strong roster of players if you want to win that championship.
I love that analogy. So as we wrap up our deep dive here, I have one final, thought-provoking question for you and for our listeners too. Looking ahead, do you think this momentum in deal making and financing, is it going to keep going strong in 2025?
That's the million-dollar question, isn't it? I mean, the improving economic conditions, the growing confidence we're seeing among CEOs, I think it suggests that there's definitely potential for continued growth. But we also have to consider some of those potential challenges out there, things like geopolitical uncertainty, the possibility of interest rate hikes and changes in regulations. It's going to be it'll be fascinating to see how all those factors play out.
And what about Goldman Sachs's, strategic shifts,
Yeah.
especially in consumer banking? Do you think they'll find that sweet spot,
Mhm.
between scaling back and taking advantage of the right opportunities?
Those are definitely questions worth pondering for sure. The decisions they make in this coming year, I think, will really shape their future trajectory. Only time will tell how it all unfolds, but one thing's for sure, it's going to be an interesting ride.
Well, I don't know about you, but I feel like I have a much better understanding of where Goldman Sachs stands today and their plans for the future. Thanks for guiding us through this deep dive.
My pleasure. It's always exciting to explore these complex topics and uncover those hidden insights.
And to our listeners, thanks for joining us on this journey. We hope you found it insightful and engaging. And if you're eager to dive even deeper, we encourage you to check out Goldman Sachs's full reports. They're packed with even more detail. Until next time, keep learning and keep exploring.